Hi, this is Tim with BS Commodities, taking a look at the week in review. This is the second week of January, I believe the 15th of January, the week of the 15th. Let's take a look at where we closed for the week on some of our commodities. We'll start out here taking a look at corn. March corn up about 35 cents on the week at $5.31 in the March contract. Soybeans, the winner, up 42 cents at $14.16. In the March contract. March wheat up almost 37 cents, 675. It was right there close at that settlement price. Livestock futures, Feb cattle down $2.10 on the week, 112.65 in February. Feb hogs down almost 70 cents at 68 bucks. Taking a look at crude, it looks like it's going to be about steady on the week here. At the time of this recording, it has yet to close, but somewhere around that 52.30 level. It is interesting, though, we have seen higher highs on the week here, and we did see a hard sell-off here today, but we've been able to put in higher highs, so there's some strength here. We did take some 7-month highs in the crude market. The Dow looks as if it's going to be about 200 points lower or so on the week. At the time of this recording. Interesting enough that it's an inside week for the Dow, so it's been a very narrow trading range, just grinding along this week. So it looks like we're going to probably close or just below 31,000. That's where we settled it last week. The dollar looks as that, again, at the time of this recording, it's going to be up about 60 points on the week at 90.71. Interesting enough, this is the highest that the dollar has closed on a weekly chart since going back to September. So that's something to monitor with our ag products moving forward as far as trade concerns. Taking a look at the corn futures, the big item on the shelf this week was the monthly supply and demand report, also the quarterly stocks report, and what ideas we were going to get out of production estimates coming out of Brazil. So taking a look at the report, certainly it was supportive as we did lock it limit up about roughly about 10-15 minutes upon the release of the report. We traded before locking it up. The carryout number came in at a 155 carryout, a 1.55 billion bushel carryout. That was down 150 million bushels from last month at that 1.7 billion carryout number. That was lower than what the trade had expected. At 1.62 billion was the average trade guess. We did lower production estimates in this report. We did lower that final crop production number more than what the trade had expected, almost 4 bushels an acre. And that was somewhat of a surprise, friendly surprise, bullish surprise, but we did offset it with lower demand in exports, which is a little bit of a question mark at this point, and ethanol and feed demand, and that's certainly understandable. So upon the release of the report, as I mentioned, we certainly found strength. We did lock it up 15 minutes or so higher for the balance of the day. Was the second most volume in corn upon the release of the January report ever, and that's with the market locked up for about 2 hours a day, or at least the front 3 months were locked up. We did open it up higher in the overnight, gapped higher in the March contract, ran it up to 542. And that was the high, has been the high since Tuesday night. We haven't taken that high out here the balance of the week. And we haven't gone down and filled the gap either. And I think that will be the immediate concern, or that's where traders will keep their eyes on here. Actually Monday night, because we do have a 3-day weekend due to Martin Luther King Day. So that'll be the immediate things that we'll keep our eye on. Taking a look at the weekly export sales for corn were very good. We expected good sales because it was a week ahead of the reports. It was the week following the holidays, and they did come in as expected, and actually better than expected. So we're still continuing to export corn. you take a look at the rally we've had since Christmas time, almost $1, and the March contract basis has backed off here some. We're about 10 under here at ADM in Cedar Rapids, and in all fairness, that isn't backed off nearly as much as one would have thought when you get such an explosive rally to the upside in such a short period amount of time here. The other interesting thing to keep an eye on for corn is the wheat market. We did see wheat push and make new highs last night, explosive gains in the March contract. That followed the Matif wheat futures, European wheat futures higher. And that's on concerns that Russia is going to continue to add a tariff to exports on wheat, and they actually up the amount of dollars they're going to add to those tariffs, and they moved that date from March 15th to March 1st. So that has found some strength in the overnight. We did sell off on the day. May have been a little bit of buy the rumor, sell the fact, but the concern is, where is the world going to go for that wheat if Russia isn't going to provide as much as anticipated? So certainly supportive for the corn market, and it's something to keep an eye on as we move forward. We'll continue to monitor weekly export sales, and we'll continue to monitor South American weather. And take a look at beans. Let's take a look at the report. The report came in. It was a bullish report. Came in as expected. As we did lower production estimates, we did see some demand adjustments there as well. And we did lower that carryout number down to 140. That was from 175 last month. The trade was expecting about not far from 140, 136 million bushel carryout. So we came in pretty much in line with what the trade had expected, but we certainly got a bullish reaction to those numbers. Maybe it was the fact that they couldn't buy corn, and people jumped over in the soy complex and started buying them. Not sure, but we did get a very bullish reaction to that. And you could also make the argument that it was somewhat bearish as compared to South America soybean production. The USDA left Brazil production alone at 133 million metric tons. That is compared to 126 million metric ton record crop last year. They did lower Argentina's production numbers 2 million metric tons, lower down to 48 million metric tons, but we are penciling in, the USDA is penciling in another record crop coming out of South America at this point. CONAB, which is Brazil's version of the USDA, did lower their soybean production estimate. They lowered it down to 133.7, and it was above 134. So they are shrinking it, but they're still penciling in a larger crop than the USDA is at this point. So that's something we're going to have to continue to watch, is South American weather. There is concerns of dryness in Argentina still. Some better than expected rains here actually towards the end of the week in Argentina at this point. Again, we'll continue to monitor it, and the best way to monitor it, I think, still moving forward is going to be weekly export sales, which were, as I mentioned, for corn, very good, and for the above reasons. We did see daily export sales most of last week, the end of last week and the beginning of this week at that 8 o'clock announcement time frame. And we actually seen export sales announced to an unknown this morning for soybeans. And that would have been likely post-report. So there's still demand out there at these price levels, and what we have to ask ourselves for both corn and beans, with a very tight carryout projected for soybeans, and with 93% of the USDA soybean export forecast already filled, we can't afford to export a lot more beans moving forward. Historically, we are front-loaded on export sales, and that is something we'll continue to monitor. So at the very least, that's going to be supported for corn and soybeans, that we are looking at 5 and 6 year tight carryout levels at the tightest levels we've seen in that time frame. We certainly can't afford, all things being equal, more export demand moving forward. The volatility for corn and soybeans, wheat, all the above are going to continue. I don't expect that to ease off anytime soon, as we're seeing a lot of outside money still continue to flow into our markets. Onto the livestock futures, cattle futures. Actually, a pretty good rally today. We're up today, but that's following a week of lower trade all week. And I'm not sure where the strength came from today. The weakness probably most likely came with cash coming in a little disappointing. I think in the South, cash traded mostly 108, 111, mostly 107, 109 in the Corn Belt. I'm hearing some weaker trade up in the Dakotas, weaker than that as well. Interesting enough, though, we did see boxes, and again, at the time of this broadcast, we haven't seen the final afternoon number, but the choice cutout did gain on the week. So there is some better margins in there for the packer. Again, broken record there. So maybe that was some of the support. We did see the Fed sell off, but we did see the April gain and push up there near the top end of the charts here today as well. But we'll continue to monitor the cash trade next week. There is concerns that we might be a little front-loaded here on cattle with the second quarter of this year, where we're going to see numbers fall off. We'll see how that gets managed by the packers over the next several weeks to months. Hog futures lower in the week as well in the February contract, and we did see a bounce today in Feb, and it somewhat resembled cattle, where we were lower here most of the week, only to see some strength come in here today. The pork cutout looks as if it is going to close higher on the week as well. Certainly a lot of volatility in the cutout. That seems to be the driver more or less for the cash index at this point. And the cash index has been grinding higher. Maybe that is related to the cutout more so than the actual cash prices out there for the negotiated hogs. Interesting enough, though, we are seeing strength in the deferred hog contracts, flirt with $90 in the summer months. And I should mention we did see strength in the deferred cattle contracts as well. And that may be speculation on my part, maybe just because of the fact that it has to catch up a little bit with the higher corn and meal prices pushing out there. So we'll continue to monitor the boxes, both beef and pork, and we'll continue to monitor weather and weekly exports for both the grains and the cattle and hogs, and we'll wrap it up with that on the week.